Samara. Thank you so much for joining us here today. We had you here last year as well at the Ondo Summit. Obviously, a lot can happen in 12 months. BlackRock's always been very forward-leading into the space. You guys launched the Bitcoin ETPs back in 2024, I believe. You had the tokenized treasury fund with Bode, and then most recently, quite frankly, some of the iShares ETFs have been tokenized via the Ondo Global Markets platform. So how do you look back over the past 12 months? What changed, what didn't? Just reflections.
So thank you so much, Ian, for having me today. I have to tell you, the only thing that feels the same about last year is the snowy landscape, which I explicitly remember. But this weekend, when I was gathering my thoughts for this conversation, I thought to myself, was it really only last year that I was here? Because an extraordinary amount of progress has been made over the course of the year, and there's a lot of things to credit with that, and I think it's something to celebrate, and Ondo has played a really important leadership role in that. But if I think about what's happened over the past year, and some of this, has really been covered over the course of the day, the big pieces are, number one, obviously the progress on the legislative front with the passage of Genius Act and just broadly speaking, regulatory engagement and progress. Lots more to do, but that was a huge milestone of progress. Number two has really been the industry engagement and collaboration with all different types of market participants. I think, frankly, in the US, Genius was a bit of a wake-up call, this is happening, and if you haven't been involved, it's time to get involved. And I think that's been productive. Over the past, call it 8 months since then, I've been a part of many more conversations with both TradFi and, DeFi and crypto players represented, and I think that's been really productive. And lastly, really to your point, has been the innovation that has actually happened in the market, including on the tokenization side. And so I think, we're at a moment where we're kind of on the precipice of what that looks like. And I'm going to add, I love that you referenced IBIT, our ETP, because it shows that you know my passion for labeling, because 99% of the rest of the world, my family, my kids, will call IBIT our ETF. But technically, it's not an ETF, it's an exchange-traded product. And in all seriousness, in a world where it is terrific how much innovation and choice is available to investors, I think the burden on us as an industry, with help and partnership from the regulators, but I actually view this as more of an industry prerogative, is to really be clear on our labeling and what we're talking about. And so I think, fast forwarding to, there's lots of developments for us to talk about, but last week, the piece that the SEC put out, guidelines for tokenized securities, was it tokenized securities or tokenized equities? It was helpful, especially it wasn't thousands of pages. It was 6 pages in reasonable font, 28 footnotes. I'm not a lawyer. I was able to read it. I needed clarifying help on 2 of the footnotes. But I think that as an industry, we can still come up with something a little bit more consumer friendly, especially when it comes to things like ETFs, because I think what you have done, and there are different models in what has unfolded on chain over the past year in terms of providing, call it, tokenized price representations to investors. And there, I would say you guys have really set what, in my view, is kind of the gold standard in that, there are models that are permissioned. Yours is permissionless. There are models that are actual tokenized securities. There are some that are derivatives. Yours is securities. And there are some that have more robust mechanisms than others for alignment in the secondary market. And I think progressing taxonomy with respect to what's trading on chain, and then, how we think about natively tokenized products when they're introduced is going to be what I hope we're talking about if you have me back next year.
I love that a lot. No, I can only echo what you mentioned. There's a lot of talk about tokenization in the US. Clearly, there's a lot of different models. Ondo has gone for a model that right now only works offshore. At some point, we hope to bring that to the US. But ultimately, it's good that these different models exist. They should all coexist, just like they do in TradFi to an extent. And then, once the likes of BlackRock start moving in with native tokenization as well, that is absolutely that we, as a company, would also be quite interested in collaborating on something like that and moving part of our backing in those assets. So, can fully agree with everything that you have said. I think for the audience, it could be helpful because I've heard you articulate this a few times, and every time I learn something new. BlackRock is pretty early in leaning forward on both crypto assets and then more recently tokenization. What really triggered that early engagement into crypto and digital assets? Why was that exciting for BlackRock to do in the first place?
Well, we have a pretty clear North Star as a firm, which is to help more people participate broadly in the capital markets. And also to make more of the capital markets accessible to them. And so over the course of, the past, we're in 2026, I guess, we built out our digital assets effort started to build it out in 2017. And very typical kind of TradFi story, I would say broadly across the investors and business people inside the firm. It was very much what are the exciting applications of blockchain technology and much less of a Bitcoin or crypto investment story. And that changed over the course of, call it 2019, 2020, when we started to hear, and then really acutely into the dual sell-offs of 2022 when equity markets and bond markets sold off together, and investors at a time then that rates started to rise really had to consider, what does a diversified portfolio look like over the course of the next 25 years? Now, 2023, they kind of got a pass because, rates were, you could invest in like short-term rates and still earn you could be highly defensive and earn some income, but then you have to think longer term about reinvestment risk. So that kind of what brought us to really listening to our clients and their interest in looking at Bitcoin specifically for its diversification potential. And then we asked ourselves the question, how, and really developed a strong view that the ETP as a wrapper would be a really helpful way for our clients to construct portfolios that had allocations to Bitcoin. So it started with the investment thesis, and then went to the wrapper.
Yeah, no, I like that framing of the wrapper in a way to make an asset more accessible. I feel like you guys pioneered that really with Bitcoin, wrapping a crypto asset into a traditional instrument and making that available to a broader audience. I feel like right now we're almost doing the opposite at Ondo, where we wrap traditional assets into a wrapper that can then be issued offshore in a different format, so it looks a little bit more like a stable coin and can be accessed permissionlessly. You've talked a little bit about some of the parallels that are happening between tokenization as a technology and the concept of an ETF. Would you mind just articulating that a little bit more in terms of what exactly that parallel looks like for you and any type of advice that you have for us as we try to continue down the path of tokenization?
Yeah, so look, I look out in this audience and I know a fair number of you, so I'm not talking entirely to a digital native audience, which again says something about the convening power of Ondo, but like, spoiler alert, we have been doing this with the ETP wrapper for 25 years, and in particular, the ETP wrapper and ETFs have been a really critically disruptive technology in the fixed income market, taking bonds, which were incredibly hard to buy, and putting them on exchange so that they were more accessible, were more easily used in diversified investment strategies. Importantly, not only delivered to investors, but created a virtuous cycle in the bond market itself, because the more investors wanted to get their fixed income exposures in ETFs, the more the market ecosystem, liquidity providers, trading platforms had to meet that demand. And because we were talking about like thousands of bond line items that go into an ETF, it meant that they had to develop algorithmic pricing capabilities, portfolio trading capabilities, and this actually ended up bringing a lot more transparency and liquidity into the bond market. So I think this is really instructive at this moment, and I think you're exactly right. You know, just as we were excited to bring crypto exposures to, you know, equity bond investors who didn't have any crypto exposures, we're incredibly excited to help crypto investors diversify their portfolios into global equity and bond markets. So we share that aspiration. I think the, you know, guiding principle for us, especially, you know, I love the mantra that you have around bringing TradFi liquidity on chain, is making sure that we don't, in the process of doing that, fragment liquidity or undermine transparency. And that's one of the reasons why, you know, you said all of these models, you know, can coexist. I kind of think, can they? I mean, some of them maybe.
Right.
Like I said, I think you guys have put out a gold standard type of, you know, tokenized price representation, but I don't know that all of the models, you know, deliver at the same level and have the same mechanisms for investors. And, you know, some of this will be, much of this will be determined by the market, and I think we will certainly go through a period of multiple models operating simultaneously. But even during that transitional period, I think we have to work really hard, you know, as partners and as an industry to preserve on-chain investor experiences so that we, and like Gracie said this beautifully in the earlier panel, we kind of continue to earn trust and build trust so that the technology can actually scale.
No, 100%. And yeah, I mean, you make a good point. I think ultimately the market will decide which form of tokenization it does actually works, right? So that's why I'm excited that we've seen very good adoption. And I appreciate the kind words around our tokenization model, because it is, if you want to tokenize assets and really make them globally accessible, you have to tap into that TradFi liquidity, really build the bridge, because to your point, ETFs have created so much liquidity in the underlying, it'd be a shame to fragment all of that. I want to talk a little bit about, you know, we talked a little bit about the ETF parallel, and now we're entering a stage where individual stocks are being brought on chain, ETFs are being brought on chain, and because of that fact, they in a sense also become programmable, right? They can engage with smart contracts, they can engage with DeFi, but what does that actually ultimately all mean for the future of asset management to have these programmable assets, programmable stocks, programmable ETFs living alongside crypto all on the same rails? What does that actually mean for asset management going forward?
I think, you know, the big picture is it's going to make it easier to construct the broadest portfolios possible. I mean, one of the reasons that we, and you know, by the way, I think I've told you this story, when the whole idea of a Bitcoin ETP was first pitched to me, I thought, I don't get it. Like, isn't the whole point of Bitcoin that it's so accessible? Like, doesn't the ETP wrapper like potentially like deprecate the promise of Bitcoin? But one of the things we learned was that investors really wanted a that without a standard wrapper within one ecosystem, it was very hard for them to manage their whole portfolio, to adjust risk, and even to understand what risk they had in what environments. So I think this kind of, you know, concept of the, integrated exchanges and you know, universal exchanges, you know, to me, I hear just the opportunity to build and customize broader and more specific portfolios for investors.
Yeah, no, I think it's, I mean, obviously it's something that you guys have done for years already, to have these model portfolios that really represent diversified exposure for an investor ultimately, depending on their risk appetite. It's interesting because I think the broader retail audience globally, particularly the ones that are crypto investors natively, they have not really had a lot of experience with just a diversified portfolio more broadly, right?
And it doesn't seem that fun.
No, it doesn't seem that fun, but it's hugely important for your overall financial returns, particularly over a long period of time. So it's very exciting to hear that you guys are kind of looking around the corner and trying to figure out how do all these assets live together and how can we essentially have diversified exposure for an on-chain user base.
I guess to that point, I mean, we laugh about it, but I think user experience, like as we all know from our lives, and those of us who have kids who are online, it really matters a lot. So when I think about like what it's going to take to make my kids actually like care and be interested and engaged in their financial health, I think as a technology, it's very promising on that front too. So I actually am quite bullish. I think that we see investors who may come to the market because they're excited to trade, but hopefully stay in the market because it encourages them to invest in a durable way.
100% agreed. So we're coming very close on time, but I want to just give you the opportunity for the next, call it 12 to 24 months. Let's say you're sitting here next year again, hopefully 2 years from now. What will need to have happened, in your opinion, for tokenization to really succeed and start coming into the mainstream?
So first of all, again, I think one of the things that has helped you guys be as successful as you have is you've had real clarity of vision, and you've been very specific about creating this integrated ecosystem and bringing, equities first on chain when a lot of people were kind of saying less liquid assets are the place to start. And I think that's something you got right. I think to get it to a sustainable place that can really scale over the next 12 to 24 months, we need to see mechanisms that provide better and more robust means of maintaining that sort of market integrity, price integrity, liquidity. And I do think ultimately, and this is going to take ecosystem work and regulatory work, but introducing issuer-led tokenizations that provide some interaction in the primary market with the fund and the underlying securities could be that incremental mechanism with these models to create a reference asset to support that market integrity. So I hope we see that.
No, I fully agree. It's kind of almost what you guys did with Bode and have that be an anchor or backing asset for other tokenized treasury funds. I'm very much looking forward to the day where we can start doing that with some of your ETF.
You and me both.
Awesome. All right. Thank you so much, Samara. That's a wrap.
Thank you for having me.
Appreciate it.